Well, hi there. Welcome to Markets Tomorrow right here on ED9, the Mumbai News Center. I'm Tanveer Gill, and we are really looking at the markets being a bit sluggish in the session, but holding on to key levels, 9,300 for the Nifty. For the broader markets also, it was a decent show, so to speak, with marginal gains being held on to. In between, it was really about financing companies in the oil and gas space. Tradebulls Housing Finance did well, HDFC did well. ONGC was a key performer. BPCL was up and running in trade. Maruti Suzuki did well. Kotak Bank was a key performer too. Among losers, you had a Tata Motors DVR, a Lupin, a Bharti Airtel, which lost ground. Let's quickly sum up the market with our top headlines. Third day of consolidation for the market. The Nifty manages to hang on to 9,300 led by support from auto stocks. FY18 has kick-started with a bang for Maruti. The automaker zoomed to its highest level, lifetime high, following solid April sales data. High demand for its compact and sports utility vehicles drove 20% uptick in sales for the month gone by. In the meantime, Uttam Galva was on a tearaway rally. Your channel learned that the company's legal troubles may have eased. The insolvency process initiated against the company has been put on hold for the time being, as the NCLAT admitted the company's plea challenging the proceedings. Meanwhile, relief rally was seen in tire stocks. Government starts investigating dumping of cheap radial tires by Chinese companies. Levy of duty to be determined post investigations. Cement stocks hit a hurdle in the session as Gadkari strictly warns companies against cartelization, threatening to better the cement industry under essential commodities. That's a network exclusive. We'll talk about that as we go through the show. With voices lined up in Sacchitanand Uttekar from Tradebulls Securities and Anshul Sehgal, Senior VP Small Cap Specialist in Portfolio Management, Kotak Mahindra AMC. We will discuss the market outlook and how you can approach trade in the remainder of this week. The question that we are asking today is that will the Nifty continue to consolidate at 9,300? And Sacchitanand, I'll start off with you. Good evening. What's your own sense? Okay, Anshul, I'll come to you before that. I think there's a problem in the audio line with Sacchitanand. What's your own sense about the market at these levels?
See, the general sense that one is getting from the markets is that people are tentative at this time. Investors are not certain of the direction, and for that reason, they are holding back on their investments in equities. The general sense one gets is that about 30% is the allocation to equities, and between 60 and 70% is cash and debt that many investors are holding. If that is the case, then whenever there is volatility, there will be money on the sidelines which will come in to buy equities, and so you may not see a material correction. But in case this turns on the other side, which is that people become extremely confident that the markets are moving from here to much higher levels, you will see allocations reflecting that. So you will have material allocation to equities. You will also have many people taking debt and investing in equities. So margin calls become relevant then. And if there is a correction in that scenario, then there will be no dry powder on the sidelines to come in and buy into the markets. So then you may see a ripple effect downwards. We are far away from that scenario at this time. We are in a position where there is a lot of capital on the sidelines to come in and invest. I would be, to the extent that there is a possibility of limited volatility since markets have moved up, that possibility always remains. But I'd be more confident of upsides than downsides with a 2 to 3 year time horizon.
Okay, Anshul, fair point. What did you make of the buying interest there is for housing finance companies at these levels?
See, that is the cleanest play on affordable housing. And many of these companies, housing finance companies, are actually playing into that theme of affordable housing. As we have seen in the recent past, government has come out extensively and tried to support this space. They have done that through lowering cost of debt. They have done that through also spurring activity in terms of giving incentives to individuals to go out and borrow. And what we are also hearing is that there is a talk in terms of lowering of stamp duties in various jurisdictions, meaning states. If all of this plays out, as we are seeing also RERA playing out, we will see a much cleaner real estate space, and particularly in the affordable housing space there will be much more interest, also because there is policy interest in that space. With housing finance companies being the cleanest play in that space, with good balance sheets and having the ability to pick the right credits, this space is going to attract a lot of attention to our mind. And again, near term, who can call? I can't say that in the next month or 3 months or 6 months there will be or there won't be volatility. But is there likelihood of this space being much bigger over a 3 to 5 year time horizon? I definitely think so. And if you pick the right pockets within this space also, the chances are you make a lot of money over a 3 to 5 year period.
Right. Fair point, Anshul. Just stay on. We have an ET Now exclusive on Uttam Galva, where it seems that the National Company Law Appellate Tribunal is admitting the company's plea as far as the insolvency issue goes. Neha joins us, Botra, with more details, exclusive ones at that, on what's the company looking forward to on the legal front. Neha?
Well, yes, do remember that a couple of days back, ET Now had reported that Uttam Galva had received insolvency order from a Dutch supplier to the tune of 100 crore rupees, wherein the Dutch supplier had moved NCLT under the newly constructed bankruptcy norms to recover the said amount. And after that, we had also reported that the steel maker, that is Uttam Galva, had actually sought relief for 2 weeks from NCLT. And in these 2 weeks, we are given to understand that Uttam Galva actually moved NCLAT, which is a higher authority, and in fact the matter has been admitted by NCLAT. In fact, the hearing is likely to continue on the 19th of May. Now remember, this is a big relief coming in for Uttam Galva, because once the case had been submitted to NCLT for trial under bankruptcy norms, what it really indicated was that the creditors of the company would appoint an interim professional as far as the entire insolvency and liquidation process is concerned. So as of now, at least for the time being, till the 19th of May, there is some relief for Uttam Galva as far as this movement is concerned. Also remember, not just this, 8,000 crore rupees is what the company owes to banks led by State Bank of India and IDBI Bank, and to that end, banks are also trying to induct a strategic investor to bring some comfort in form of fund infusion going forward. This of course is something that remains to be seen how it will pan out given the crucial legal developments, but do keep in mind that State Bank of India and Edelweiss ARC and in fact even Aeon Capital had submitted bids for acquiring stake in this steel maker, and we'll have to see how this progresses. But for now, Uttam Galva has confirmed these developments, and that really is a big relief coming in for Uttam Galva, at least for now.
Yes, indeed. Sacchitanand Uttekar also joins in with his perspective. Sacchitanand, have you taken a look at the charts of Uttam Galva and the big move in the session today?
Well, good evening. If you look at the overall price action, yes, we've really seen good stupendous volume in today's session, but we don't really track this particular counter on a day-to-day basis, so it will be very difficult to give an argument on based on the chart pattern. So if you look at the overall momentum, then follow-up buying is something that could be very critical from here on. But if you look at the overall structure, the stock has been finding itself very difficult to trade above 40 levels. So 40 would be an interesting level to watch out in case if we see some buying momentum coming in the coming trading sessions.
Okay. Yatin also joins in to talk about the auto sales and the impact they had on market sentiment as far as auto stocks went. Maruti and Eicher Motors clearly bucking the trend there. Yatin, tell all.
Well, the auto sales for the month of April have been good when it comes to select commercial vehicle players and the passenger vehicle segment. Of course, starting with Maruti, which posted almost a 20% growth versus the figure a year ago, and they have clocked in sales little over 1.5 lakh unit. Of course, the demand comes in from the two successful recent launches, which is Baleno and Brezza, and the order book there continues to remain good. In terms of the commercial vehicle players, especially the truck players and the heavy truck players, we have seen some kind of pressure on the growth, given the fact that most of the companies have taken price hikes as they introduce new BS4 vehicles. So you have Ashok Leyland wherein the sales were down 30%, Tata Motors overall sales were down 20%. Also talking about the Royal Enfield business, Eicher Motors clocked almost 25% growth there. If we talk about the tractor segment, that has been doing well on the back of rising rural incomes and better rural demand, which was suppressed due to demonetization. So we saw almost a 21% growth for M&M in the tractor segment and almost a 20% growth for Escorts as well.
All right. Thanks very much, Yatin, for that. Very quickly, Anshul, your take on these auto sales numbers?
Clearly, there is a trend where part of this auto market is doing very well. This is the part which is able to excite the customer, and there is another part of this market which is unable to excite the customer. And it is the analyst's job to sit back and understand which segment is which. And backing the right segment can be quite lucrative. Go back 3 years and Maruti Suzuki used to be 2,000 rupees and it's 6,700 now. So if you had picked the right opportunity there, that's the amount of money you would have made. And the objective clearly is which of these segments is able to excite the customer, because there is a clear kind of move towards that segment from the customer side, and the ability to pick that can be quite lucrative. Not to say that some of this has happened in the past. Now we need to pick those segments which will actually do well in the future and which will excite the customer in future. That remains the challenge.
Sure. We'll take a break right now. As we do so, hear out Mark Matthews of Julius Baer. He's very bullish on India, believes that 10,000 on the Nifty is very much in sight and soon enough.
I think that it's quite easy to get to 10,000, and for the Nifty, certainly, we're not far from there now. There's a very strong base effect of earnings this year coming from banks and commodities in particular, and that should mean that overall earnings could be 20% or more.
Welcome back. You're still watching Markets Tomorrow right here on ET. Now let's go across to Poonam first to get a quick sense on what to expect from ICICI Bank's earnings tomorrow. Poonam?
Well, ICICI Bank is likely to post good profits, but that would be on a pretty much a weaker base. In fact, the profit is likely at 2115 crore. It would be led or impacted by higher provisions and also on account of muted net interest income growth. Firstly, in terms of the entire asset quality, do expect higher provisions during this quarter. Also, watch out for the use of contingent provisions. Watch list and the slippages from the watch list would be keenly watched out for. In the last quarter, the watch list stood at 27,500 crore, and the additions or the slippages did stand at 7,000 odd crore. So there is a possibility that we do see similar slippages or some moderation there, but that entire space would be keenly watched out for. Besides that, of course, the entire recognition in terms of Jayaprakash Associates accounts, what is the kind of stress that they have booked, and the entire exposure to the stressed corporate sector would be keenly watched. We probably should be seeing some amount of pressure in terms of the margins on account of higher slippages and also on account of MCLR cuts. Muted fee income is likely. Non-interest income is also likely to be slightly muted on account of one-off stake sale in the previous quarters. But management commentary further in terms of any stake sale monetization in other subsidiaries would be keenly watched. Loan growth is still likely to be slightly better. 8 to 10% is what the market is working with. This would be on account of improvement in the retail loan growth as well as some amount of working capital loans. Overall an okayish kind of a quarter, but do know that watch out again for the entire asset quality trends management outlook in terms of growth as well. The stock is already trading at close to around 1.5x FY19 price to book. If at all the management does give a positive guidance, there is every possibility that we do see further stock momentum from the current levels. As of now, an okay kind of a quarter.
Thanks very much for that, Poonam. Anshul, from among the banking names, how have you seen the series of results thus far?
Some of the results have been beating expectations by a margin. And if you notice that much of this is happening in the space which was stressed till recently. So it does seem like many of these names have hit the bottom as regards bad news is concerned, and things seem to be turning on NPAs as well as on growth. The market has been hugely disappointed on growth particularly, and that is a function of directly of the NPA structure that many of these banks have, and the NPAs that they've exhibited in the past. If NPAs abate and as a result provisioning comes down, and then the focus of many of these managements shifts from the fire in the house to actually go out and grow, that will be a very positive trigger for the markets, because in many of these names markets are really expecting nothing. We saw a trailer of that in the last quarter. To our mind, much of that will play out in this year, and the ability again to pick the right names in this space will be quite rewarding in 2017.
Sacchitanand, how are you looking at ICICI Bank on the charts?
Well, if you look at the overall structure, the stock has been underperforming the index, and if you look at the recent history as well, you have seen that the stock has been oscillating within a range of around 290 on the higher side and 260, 265 on the lower side. Recently we saw a rebound from its 200-day moving average, which is placed around 265, and that is supporting the fact that this time, in case if the earnings are delivered, we may see this particular range getting broken out. So overall, we are not really aggressive on the counter right now, but a breach about 285, 290 would definitely attract a fair amount of momentum, and we may see the stock heading towards say 305, 310 very quickly. So the stance on a broad basis on ICICI is more or less on the bullish side until 265 is heard.
Right. So that's the view coming in on ICICI Bank. Let me wrap up by taking ideas from you first, Sacchitanand, on how to approach trade tomorrow.
Well, we have three buy calls, especially from the mid-cap space, where we have seen a fair amount of momentum even in today's session. Our first recommendation is a buy on BHARATFORG. We have seen a bullish pennant formation on the daily scale. We expect the stock to scale towards 1220 levels, and a stop loss can be placed around 1125. The second call is a buy call again on INDIGO Airways, wherein we have seen a good pullback near the rounding bottom formation, and the stock has been holding well above 1100. So a stop loss can be placed around 1090, and a price expectation around 1240 can be expected. The third call is also on the bullish side. We are liking CARE ratings. We have a target of around 1700. We expect this particular rebound to happen in next couple of trading sessions. A stop loss can be placed around 1530, and longs can be advised here.
Yeah, Anshul, what's the big theme that you are scaling up on, in terms of a weightage change, so to speak? Are infrastructure names, power utilities drawing your interest?
More than looking at sectors, we look at pockets of inefficiency. What happens in the markets is that in certain pockets there is a huge differential between the price and the value. And irrespective of where markets have moved in the recent past, these pockets are always there. It's just that it becomes harder to look for these pockets if the markets have rallied. But we are trying to find these pockets. One theme which we are clearly witnessing in the markets today is that there is going to be a shift away from the unorganized sector towards the organized sector. This is on account of many factors. Primary thread leading to this kind of a trend is that there is enhanced transparency in the Indian economy. That enhancement in transparency is non-reversible, and with demonetization and GST, this trend is only going to accentuate going forward. We want to take advantage of this trend. We want to find those names which will benefit as a result. There will be many players who are playing on tax arbitrage, and once that tax arbitrage goes away, these players will get impacted negatively and they will stand to lose volumes. Those volumes or that demand will not die out. That will move towards the organized players who are able to cater to that demand, and we're looking to basically benefit from this trend. This is one theme that we are absolutely looking forward to, and we do firmly believe in this one theme.
Chairman, thanks very much for taking out the time to speak with us today. We appreciate your views and your insights as always. That's Time Out in Markets Tomorrow. As we wrap up the show, I want to leave our viewers with another important market opinion in Amit Khurana, Head Equities and Head of Research at Daulat Capital Market. Hear him out. We of course will be catching with all the market action as always from morning at 8 a.m. That's when your appointment is with us.
We've been actually preferring to play the mid-sized pharma companies because the opportunity size there is well defined, and your ability to see a visibility on some of those pipeline is far better to assess. So a couple of names that we've liked, if I may mention, is Dishman Pharma, given the recent approval which one of their innovator companies got, and that seems to add considerable amount of visibility to the entire earnings trajectory for the next couple of years. And we also believe that Jubilant will be the one to watch out for, considering that the core businesses are coming out of the lower part of the trajectory, and hopefully the trajectory should be better off from here onwards for the next couple of years. And there's a balance sheet deleveraging which is going to play out based on the cash generation that they do. So we believe that will be another one to watch out for.